Real relationships aren't built on a single day of overpriced roses. They're built on the everyday moments. The morning coffee made just right. The I got the kids, you relax on a chaotic day. Or that deep, unspoken bond of knowing exactly what to order for your partner when they say, I don't know, surprise me. And with relationships come expectations. Some are reasonable, like remembering an anniversary. I just have to set a reminder. Well, let's just say cleaning the bathroom every week feels a little excessive to me. I mean, geez, I just did that last week. Surely we don't need weekly confirmation that soap scum still exists. But expectations do matter, and just like in relationships, they matter in mortgages too. That's where FHA loans come in. A mortgage product that, much like the chill, easygoing partner of the loan world, is a little more forgiving and a little bit more understanding and more flexible than its high-maintenance cousin, the conventional loan. Think of it this way. If a conventional loan is like the one friend who always wants you to dress up just to go to the store, FHA loans are the chilled, relaxed friend who says, sweatpants? Perfect, let's go. In today's video, I want to showcase the leniency and the flexibility that you will discover in choosing an FHA loan. Make sure you give this a like and subscribe to the channel. Credit scores are intimidating, a 3-digit number dictating your financial fate. Now, the credit score spectrum runs from 300 being the lowest all the way to 850 being the highest. The higher your credit score, the better financial options you'll have. It is true you'll get approved for more loan options and get access to better interest rates with a higher credit score. However, low credit scores can still get the job done. You don't need to shoot for the moon to qualify for an FHA loan. Mortgage lenders tend to give the best rates to anyone with a credit score of at least 760 or higher. While 850 credit score is the highest, and then that's equivalent to like a unicorn, it doesn't matter. You'll still get the same perks at a 760 score that you'll get at an 850 score. According to Experian, roughly 1.54% of people have an 850 credit score. 21% of Americans have scores between 800 and 849, while 28% are between 740 and 799, and just over 21% have a score between 670 and 739. That means 28% of U.S. consumers have credit scores of under 670. There are still loan options available for people with credit scores of 500 and up. With FHA, we look at all 3 credit bureaus, and whatever your middle score is, if it's 500 to 579, you only have to put 10% down to buy a house. If you have a middle credit score of 580, you only have to put down 3.5% to buy a house. 580 middle credit score? Yes, you still only have to put 3.5% down. 10% down for 500 to 579? Yes, that is still possible. For more information about this, check out my other video right over there, Tips of the Week, Why Credit Scores Matter in the Mortgage Process. FHA features seller credits as well on their purchase transactions. And speaking of breathing easier, seller credits are where FHA really shine. FHA features seller credits on the purchase transactions, so I want you to picture this. You find your dream home, but closing costs are standing in the way, like an overpriced toll booth. Enter seller credits, where the seller can contribute up to 6% of your closing costs based on the purchase price. That's like getting a financial wingman to split the bill on your biggest purchase ever. Seller credits are available on all mortgage products. Please remember, FHA allows up to 6% in seller credits. That's the most on any mortgage product. Seller credits is when a seller agrees to give you money from their proceeds to reduce your closing costs on a particular purchase transaction. This at times is an incentive to encourage you to buy that particular home. These credits can be used to pay for title costs, setting up an escrow account, or buying down your interest rate. I've seen recently a lot of customers want to take advantage of buying down the interest rate to maintain a certain payment that they would feel comfortable with in a monthly basis. And for those of you who feel like saving for a down payment is an Olympic sport, FHA also has a down payment assistance program. But here's the kicker. Google doesn't even know about most of them. That's right, even Google is stumped, which is why working with a guy like myself who actually knows these hidden gems can make all the difference in the world. I offer these products and it works for most. For some, the thought of having a minimum down payment of $10,500 for a $300,000 purchase price is a daunting task, considering the fact you will need additional funds for closing costs. That is why FHA features a down payment assistance program. FHA will help buyers purchase a primary home with covering your down payment. It's amazing. The down payment assistance covers the 3.5% in exchange for a higher interest rate or sometimes a silent second mortgage. They will cover the down payment requirement for you as long as you have the funds for the closing costs. That is an option that will help you get your first home. I just helped out the Fisher family last week, and they bought a $265,000 house. And with seller credits and down payment assistance, the Fisher family only had to bring $735 to closing. Unbelievable. Now, the thought of this is not a guarantee for everyone to have the same experience, but I wanted to show you what will happen and what could happen for your specific situation if all these things were to work out. It's just an example of what is possible and what could be for you. Another scenario is the Turner family, and they only brought $4,400 to the closing table on a $210,000 purchase. Now, I know what some of you may be thinking. Well, if my friend only brought $1,000 to closing, why do I need to bring in more? Because every deal is different. You can't just assume the higher the home price, the more you'll pay up front. That's like assuming the more expensive the restaurant, the bigger the portions. We all know that's not how it works. Every transaction is different, and we will have to review your unique situation, but definitely the amount of money that you may need may not be as much as you think. And let's talk about debt to income ratios, or as I like to call it, the balancing act of adulthood. FHA allows up to 56.99% of your gross income. That means if you're juggling student loans, car payments, and the occasional DoorDash splurge, there's still a way to move forward for you. When you apply for an FHA mortgage, you are required to disclose all debts, which include open lines of credit, and then you're also supposed to disclose all possible approved sources of regular income. According to the FHA official site, FHA allows you to use 46% of that gross income. That's the max that you can use of your income towards your housing costs, which is your principal and interest payment, real estate taxes, homeowners insurance, and PMI. 56.99% is towards your housing expenses and other long-term debt. Those percentages should be examined between a conventional loan. Conventional loans basically will cap you at 46% on the housing expense, but their maximum overall debt can only be 49.99%. Do you see how these numbers seem unforgiving? FHA does offer some flexibility when it comes to debt to income ratio requirements. Under the right circumstances, an FHA loan applicant may be given some leeway with debt to income ratios because FHA programs are aimed to make homeownership more accessible to borrowers with low credit scores or limited down payments, which often means they may have higher debt levels relative to their income. This flexibility helps them qualify for a mortgage where they might not with stricter DTI guidelines. That means you have choices, you have opportunities, and you don't have to wait for the perfect moment to take action because the spoiler alert, the perfect moment doesn't exist. So whether it's buying a home, buying an investment property, fixing your credit, or just finally tackling the pile of laundry that you've been avoiding since last Tuesday, let's take action today. The definition of carpe diem is to urge someone to make the most of the present time and give little thought to the future. Let's take advantage of the opportunities that exist that are available today. And as always, have an epic day.